Thank you for watching, and click the link attached in the description to get a 30% discount on transaction fees.
I will be discussing with you a little further into this video. It's later in the day now than it was when I first recorded the video, so I did some analysis on the New Zealand dollar earlier, and we picked this zone here that you see in the gray box as a potential buying zone, a potential zone to get along this pair. And as you can see, we came down into this zone and put in a really nice long candle wick right here before exploding up on this one large green candle. So for any of you that thought I may be in this trade, I just wanted to clear that up. I was not able to take advantage of this trade here because I was not around my computer at the time. But if I would have been around my computer at the time, I would have bought the close of this very long wicked candle here. So with that said, I hope you guys enjoy this video. It's going to be very similar to yesterday's morning analysis video. I did get a few more opportunities throughout the day yesterday that I took advantage of, and I'll share those with you when the video starts. And also we took a few trades today. Some we made money and some we lost money in. So I'll go ahead and let the intro and the disclaimer roll, and I'll see you on the other side. Good morning, traders. It is 8:22 a.m. on the East Coast, April 1st, April Fool's Day here this Friday. Non-farm payroll does come out in the next few minutes here, and I just thought, since I got a good response to yesterday's video, that I would go ahead and do one more video like this to show you kind of how yesterday played out according to my analysis, and some of the trades that we took yesterday, give you the results of those trades and some more areas that I'll be paying attention to going into next week. So we'll start off here on the euro dollar, and before we get started, I also had a question about whether or not I trade during news and whether or not you should trade during news, and my answer would be however you back tested is how you need to trade. For instance, if you back tested advanced patterns and you did not account for news during your testing, then there's no reason for you not to trade during news. Now, with that said, I would try to reduce risk during news days. For instance, if you had 6 or 7 advanced patterns come up on a day that there was news, maybe make a rule in your plan to only take 3 or even 2, just because if you are risking more than 2 or 3% of your account per trade and you have 6 trades on and you lose all 6 of them, you are going to be in a world of hurt. So that's what I do during news. What you do will be up to you, but that's how I handle the news situation. So here on the euro dollar, as you can see, we did continue higher as we discussed yesterday, but we never did get the pullback we needed down here towards our 786 retracement in order to get involved in this trade. Instead, we pulled back down into the 382 and then shot back up. So for that reason, I was not involved in a euro dollar trade, and now at this point we have broken structure to the upside, and again we would be looking for a similar trade to the upside. Now, one thing I do change on news days for the 786 strategy is that if we do make it down here to the 786 today, because non-farm payroll does come out, I'll be waiting for a reason for entry. I will not just be having a limit order at my 786 retracement. Alright, so moving on down to the dollar yen. On the dollar yen, we have sold the breakout that we were talking about yesterday. Well, hopefully the breakout that we were talking about yesterday. So far we've broken below our trend line, and we are trying to get down here to this previous support level, which is where my targets are. I'm set up with close to a 2-to-1 risk reward on this trade. And full disclaimer, just because you see me taking trades like this does not mean you need to. The entire point of me taking this trade is because I know that if I consistently take this trade in the same way, putting my stops and targets in the same places, and selling with my certain rules for a breakout trade, that I'll be profitable over the long run. I have no idea whether or not this specific trade will win, especially considering the fact that today's non-farm payroll. But even other than that, I have no clue whether this one trade's going to win. I don't know what the market's going to do. I just know that if I consistently perform this strategy on breakouts, that over time I make money. So and that goes for anybody, not just me. If you just see someone trading and you think they have a good idea, whether that be on TradingView or on YouTube or anywhere, don't assume that that trade's going to win because they are a profitable trader. That's not the case. They're taking that trade, if they are a profitable trader, most likely because they back tested that plan and that strategy, and they know that if they take that trade over and over, that they will be profitable. They're not concerned about the outcome of that one specific trade. They're concerned about the outcome over the course of 100 trades. So that's the trade we're in on the dollar yen. Next we'll go to the pound dollar. And as you can see, we did manage to come down and hit targets here on the pound dollar. If you missed the analysis on the pound dollar yesterday, I will put a link in the bottom left hand side of your screen to the morning analysis video I did yesterday morning, showing you the analysis I did before entering this pound dollar trade here, which, as you can see, did come down to hit targets earlier this morning. Go down to the dollar Swiss. On the dollar Swiss, we were waiting on a pullback and continuation down. Obviously, we got a small pullback and a continuation down, but not quite as much of a pullback as I was looking for in order to get involved in this trade. And the reason being because if I would have sold this pullback, unless I took an extremely aggressive entry on a lower low, lower close of the pullback, which is an option, and you could test and possibly would be profitable. I'm not real sure. I've never tested that, but for the way I trade, I would have had to get in here on that doji maybe if I was entering aggressively, this doji here. And my stop would have been above our most previous swing high. My target at previous lows, as you can see, inverted risk reward. And that is the reason I was waiting on a deeper pullback in order to get involved in this. I did expect us to go down here, but I did not want to be involved unless we were up, unless we were traced up to this previous swing high. Moving along, Aussie CAD, all we were looking for was an advanced pattern, and we never got one here. Pound Swiss, as you can see, I need to cancel this order. We were blown out of the water on this cipher pattern. So far for yesterday, we have one win on the pound dollar of a little over 100 pips and one loss here of 40 pips, well 47 to be exact. We'll call this 50, and we'll call the pound dollar a win of 129. Next up, let's go down to the euro pound. On the euro pound here, if you'll remember from yesterday, we discussed a possible trade in this zone, but I did explain that I did not like this opportunity unless we had a double top and a break of the neckline. As you can see here, we did get a test of the structure level, and we pulled back because this was a important structure level. Next up, a retest coming in here. I'll zoom in so you guys can see a little better. So we had this first test, this retest, and then we broke out to the high side. And of course, we never did come down here and break through our previous structure low, which is what I was explaining yesterday that I was looking for. So the only way I would have been involved in this trade is if we would have come up here, back down for the retracement, up for the retest, and broke through to give me confirmation that this wanted to reverse. After that confirmation that the pair wanted to reverse, I would have needed a pullback up into this zone in order to get a good risk reward and put my stops above our swing highs here and hopefully targets down here at previous swing lows. None of that ever happened, so instead we are just stuck doing more analysis. Now, instead of taking the time to go through the 4-hour and daily charts, I've already plotted a couple of lines here where I think that the market could possibly reverse. And since that's the case, unless we get up here to this zone, then we will be looking for a similar trade to the euro dollar, possibly a 786 trade, so we can put stops below our swing low here in expectation for a continuation of the trend to the high side. Now we'll continue down. Dollar Canada, non-farm payroll must have come out, and we have nearly been stopped out on this wick to the high side. Now we're going to get a bit crazy in the markets, but we are involved in this cipher pattern here on the dollar Canada. Next up, we'll move down to the euro Aussie. The euro Aussie, we were looking at a potential cipher pattern yesterday, which did complete here. If I pull from my swing high down to the swing low of the cipher pattern. And again, if you missed yesterday's video of my morning analysis, I'll leave a link in the bottom left hand side of your screen. And also I have a tutorial on the cipher pattern, and I'll post that link in the top left hand side of your screen. So go check that out if you don't understand the ratios for the cipher pattern. And this one came in from X to A, A to B, B to C, CD completion right here. As you can see, if I pull my 382 targets from swing low down here up to swing high, that we easily came down to hit our 382 target, which gave us a profit of around 58 pips. So far we have a loss of 40 pips, a win of 140 pips, and a win of 58 pips. There were only two other trading opportunities that I wanted to discuss with you guys today, other than the ones we went through yesterday, and those two are on the New Zealand dollar and the pound yen, so that's what I will go to next. Alright traders, so here we are on the pound yen first off, and I'll talk you through a little bit of the analysis I went through in order to get involved in this trade. The first thing I did in order to be involved in this one was, again, saw that on the hourly time frame we had broken structure to the downside here. So that gave me a reason to want to look for a shorting opportunity on this pair. And this was a similar trade to the pound dollar trade with the test of structure and double top scenario, but it also had a few more reasons of confirmation that I took into account before placing this order. So I'll back up to the 4-hour and daily charts so we can check out the reasons for entry. As you can see, I've already marked this previous structure level here that we were up against when I made my trading decision on this pair. And as with the pound dollar, once we were up against this previous structure level, we did put in a double top with RSI divergence. We did break through our double top neckline here, and we did retrace back up, giving me a better risk to reward on this trade. And obviously at first my risk was up here, so I did have close to a 1.5 to 1 risk reward. But since we have broke these lows, I was able to move my stop down to just above this swing high here. But this was not the only confirmation I had. If I go out to the daily chart, I can show you a few more reasons why I was able to get involved in this trade. Let's shrink this down a little bit. As you can see here, similar to the pound dollar yesterday that we discussed, we have our structure level here that created a little zone that I was interested in selling. And you may ask, why are you interested in selling this pair? The answer is on the chart. If you look on the daily here, you can see that since November of 2015, really since December of 2015, we have been on a steady move down, only having a few green candles before our slight retracement here. And what do we expect while we're in a downtrend? Well, here we move down, we get a retracement. And as long as the market continues to make lower lows, then I'm still expecting the same thing. I'm expecting the move down, the retracement, the move down, the retracement, the move down, and the retracement. So that's what I'm looking for out of this market. Since I know that I'm looking for a move down and a retracement, then I just have to determine where we are in the market. As you guys can see, we are in the retracement. Since we're in the retracement, now I know that I need to be looking for the move down. Since we've made a high here, followed by this first lower low, and I hope this isn't getting confusing, guys, but hopefully you can see this. We've came up, broke this high in what is known as more of an advanced pullback here, coming up, breaking down on a retracement, then breaking above that high, then really an advanced pullback in form of some consolidation here, breaking below our low and creating a lower low right here. Now we've created this lower low, and before I entered the trade, we got a bearish engulfing candle right here at previous structure, giving us a lower high than this previous high. Do you see all these factors coming together? Understanding all of this is the way you can put yourself into a very good situation for trading the markets. Since we have a lower high, a lower low, following the underlying trend of the market, and also we have determined that we are in the pullback area at this time and we are waiting on our next impulsive move down, then we know we have our zone that we've created here with the wicks of these previous candles, and we just look for a trading opportunity. The trading opportunity we got came as a double top, break of the neckline, and a retracement that gave us a good risk reward. Once we got that, I decided to sell the market, and my take profits were based on a 1 hour chart here. I decided to take profits down here at previous structure resistance because I know that that could turn into our next support level. And if you ask me, guys, I honestly need to go ahead and put some profits on here. I haven't even done that yet. So now that is the reason that we were involved in the pound yen trade, and it looks like we're getting pretty close to hitting targets now. And since we are so close to targets, guys, I may just leave this on and see if we come down to hit them. Getting as close as we have, I am going to move my stops to break even. Oh, don't have to, just hit targets. Awesome. So there was our pound yen trade, the analysis. Hope you guys enjoyed that. Next up, we will look at the New Zealand dollar. On the New Zealand dollar, I've already got mapped out here an area that I would like to pay attention to for a long opportunity, and I'll go ahead and delete it actually so I can better show you the reasons for that area. Here we have broken and closed above our previous high on the hourly chart, which, like I told you guys yesterday, this is what I do in the mornings. I look for opportunities on the hourly. So since we have broken and closed above our previous structure, I know that I'm looking for a long opportunity. Where do I want to take this opportunity? Well, I need a place for my stops to go. And the place that I see where my stops could go is under our most previous swing low here, which is a very small structure level that I really wouldn't pay attention to for a long opportunity. But considering that we are going with the trend, and if I can confirm that with some higher time frame, this may be an opportunity worth taking. So let's head out to the 4-hour chart and see what we have. Obviously, we've broke above our previous structure level as we saw on the hourly chart. Let's zoom out and see if we have any room to the upside. And I do think that we have room to the upside until at least this previous structure level here. I believe that's the next place the market could see some resistance. I think that we will probably make it to this area before seeing a significant reversal. Now guys, this is just an estimated guess. It's just my analysis. I know that I'm right more often than I'm not right using this kind of analysis, but that does not mean that it's 100% accurate. The market does what it wants to. I'm just picking out previous points of structure where the market is normally drawn to. I'm not saying that the market has to come up to this level. The market could reverse right now and drop 100 pips, 200, 300 pips to the downside. I have no idea. This is just the analysis I do every morning, and if I'm consistent with my analysis in the mornings, I've realized that I normally profit consistently from that analysis. So here we are on the 4-hour chart. As I have discussed, we do have room to here according to my analysis. So now let's take a look at some potential zones that we could get involved in. As we discussed before, our little arrow is pointing at this little blip of retracement that we have here that we could put stops under. What are we going to do next? So we've got our previous structure level here, and what I like to do when I have a pullback into a previous structure level and I don't really have a good place for stops is I look for some Fibonacci confluence. So I'll take a Fibonacci retracement from my swing low here to the swing high and see if we get anything against this previous structure level. As you can see, we do have a 382 retracement coming in at that previous structure level, and as we all know, the 382 retracement sometimes can act as strong support or resistance. Since we have that 382 coming in at a strong level of resistance already, and if we look back on the daily chart, that is actually a significant level of structure. Market hitting it 3 different times here. 1, 2, 3. And we also have our Fibonacci confluence there, so I do believe that this would be a good zone for a long opportunity. The zone would consist from this highest wick here down to our 382, and if we jump down to our hourly chart, now all I will be doing is waiting for an entry reason on my hourly chart. There is a way to get involved in this in an aggressive trade instead of a more conservative approach, and the way to do that if you are a super aggressive trader is just wait for the market to come down to our zone and then possibly put in a higher high, higher close candle. Bad color for the zone, guys. I'm sorry. Let me change this to gray so you can see the green candle a little better. So here if we got a higher high, higher close candle, and I'm actually going to change this candle to red. And then if we put in a engulfing or higher high, higher close here in green, a really aggressive approach to enter this trade would be to just take the trade on the close of this higher high, higher close candle and put your stop below the swing low. That would be a very aggressive way to take this approach in the trend continuation trade. Now another way to do it, a more conservative way, would be to maybe wait for a double bottom in this area. So I hope you guys can see kind of what I'm doing every day on a consistent basis. I'm coming into the market. I am looking through 3 different time frames for a zone that I consider to be important, or a zone that I consider to be a level that the market should pay attention to. I'm drawing out a zone according to that level, and I'm just waiting for a trading opportunity. And the trading opportunity is your entry reason. So while back testing, you need to be able to have 2 different charts up, at least, so you can have some higher time frame confluence. So have your 2 different charts up, create your zone, and then decide what you want your entry reason to be. Do you want to have an ABC pattern every time you enter the market? Do you want a double bottom every time you enter the market? Do you need is all you need is a higher high, higher close candle? Do you want to be a very aggressive trader when it comes to trend continuation, but on counter trend moves you need a more conservative approach, like a double top with a break of the neckline and a retracement to give you a good enough risk reward to get involved in the trade? That's similar to how I trade. Throughout my back testing, I decided that I wanted to be a more aggressive trader when it comes to trend continuation, and a slightly more conservative trader when it comes to counter trend trading. Now, all that being said, if you are a beginner, I strongly suggest that you just pick one type of trade to test. If you think you would be better at trend continuation and going with the flow of the market, then I would suggest doing that. If you think you would be better at counter trend, at being the rebel in the market, if you will, then that's what you should test at first. And if you're a newer trader, find a way to create a plan with completely non-subjective rules, and then test that plan on a demo account to see if you can consistently produce profits with it. Alright guys, so that's going to be the end of today's video. So before I end the video, I did want to go through and show you guys what yesterday's morning analysis and today's morning analysis was able to produce in the market. We managed to get 129 pips out of the pound dollar. We lost pound Swiss cipher pattern for 47. We lost 68 on the dollar CAD. That's the one cipher pattern that we were in during non-farm payroll. We won 57 pips on the Euro Aussie, and we won 182 pips here on the pound yen, for a total of 253 pips in 24 hours. Now that is a very impressive return in my opinion, but this does not always happen. I'm glad that these last 2 days worked out like this, because some days in 24 hours I can lose just as many pips, and that would not have made for a very good video. But considering that we did make these 253 pips, I wanted to take full advantage of that and show you guys that it is possible to make a very large amount of pips on a very few amount of trades. See, that's kind of the secret, is learning when to sit on your hands. If you can avoid losses, that's almost just as good as winning more. So anyway, I hope you guys found this to be educational, and if you did, don't forget to leave me a comment so that I will produce more content like this in the future. Also, if you're new, do not forget to subscribe to my channel to be alerted by email every time I come out with a new video. And here in just a second, I'm going to go on a bit of a rant about trading plans and strategy development. And also, I'm going to be answering the question of whether or not I've taken a training course. That seems to be a question that I get asked a lot. So if you're not interested in hearing me talk and you really just come to these videos for the charts, that's fine. But now would probably be the optimal time for you to go. And with that said, I hope you have a great weekend, and best of luck to you in the markets next week. I will talk to you soon. For those of you that are left, the answer to the question of whether or not I've taken a training course is no. I have not ever taken a Forex training course. Well, I've not ever paid for a Forex training course. I've looked at a lot of free information across the internet and on YouTube in order to get where I'm at today. At an early point in my trading career, I realized that the secret was not looking for the strategy that makes 1,000 pips a month and produces a 90% win rate and always gives you a 2-to-1. That's not the secret. You're not going to find that from someone else.
because no one else knows how to produce that either. And if they say they do, and they say that that's what they're going to teach you is how to win 90% of your trades and always have a 2-to-1, then more than likely they're lying. The secret to trading is all about statistics. I was very lucky to learn that early on in my trading career. And the statistics are, you have to have a strategy that wins over 50% of the time and gives you a risk to reward of over a 1-to-1. That's all you need to be profitable in trading any market, is a strategy that produces a 50% win rate and over a 1-to-1 risk reward. Now, knowing that, I honestly do not know why anyone would need to take a course. Now, notice I said need. If someone wants to take a course, I think it's a very good idea. You always want to widen your horizon to other things when it comes to trading. You may need to take the courses for new trading ideas, new strategy ideas. But make sure you're taking the right course. You want to take a course that teaches you about risk management, and normally you do not want the courses that promise you 100% returns in a month, and you don't want to take the courses that are talking about how much you'll make with the strategy they're going to sell you. Instead, look for the courses that teach you the basics of technical analysis and maybe some advanced forms of technical analysis and teach you risk management. If you find a course like that, I think it's a very good investment. I've just chose not to take a course like that because I've been able to become profitable without ever needing that. I also think a good thing about a course is a lot of them come with mentor programs and coaching programs. So that's someone there that can hold you accountable for taking profits early. Someone there that can kind of help you on the psychological side of trading, which is the really difficult part to figure out. It's not the technical part. The technical side, you can learn almost all the things you need to know about technical analysis for free on YouTube and throughout the free educational sources that are on the internet. The technical analysis is not necessarily the hard part. It's pretty simple. If you know that previous structure support once broken becomes resistance and vice versa, and then you also know a few candle formations like long wicks to the top indicate selling pressure, bullish and bearish engulfing candles can indicate a reversal, and with that you can really create a strategy. And then if you throw in a couple of indicators, and don't use the indicators for entry reasons, that's a lagging thing. An indicator is lagging. That's something that has already happened on price, causes the indicator to do what it's doing. But if you use the indicator as part of a rule, like only trading engulfing candles back up at previous structure with overbought conditions, now you have a strategy. You add only in trend to that, and you could test that, and it may be profitable. I don't know. I've never tested it, but it sounds like it could be a profitable strategy. And if you have the determination to go through the market for hours and hours and hours, it's not easy. But if you go through the market for hours and hours and hours and you test that strategy and it comes up to be more than 50% profitable, and you normally have over a 1.5 to 1 risk reward, then you can be successful. There's no reason you can't make money in the market if your strategy performs that way. So that's all I've done throughout my trading career. And that even is the case when it comes to advanced patterns. With advanced patterns, all I did was look up the ratios online. And of course, I watched a few videos on YouTube and other free sources on how to draw the patterns in. But once I figured out the ratios, at the point of my trading career where I knew that the only thing these people are doing with these advanced patterns is taking these specific ratios and testing them throughout hundreds and hundreds, sometimes thousands of trades to see if they've been profitable throughout history. Once you realize that, then it becomes easy to create your own strategy. You can test anything. And what I decided to do is just take those ratios and test 100 trades with the ratios that were given to me on the internet and throughout the sources and videos that I watched, and play with the ratios a little bit. For instance, on the bat pattern, I started out testing 100 trades with a 50% retracement of X to A and a 618 of A to B. That was my first test on the bat pattern. Produced 50% or more profitability, and gave me a pretty good risk reward. And then I decided to try it with a 50% retracement. So a 50% from X to A and a 50% from A to B. That produced pretty good profits as well. Next, I tried the way that I use today, which is a 50% retracement of X to A and a 382 from A down to B. The reason I trade that way is because it produced more trades. The percentage of wins was nearly the same, a little bit over 50%. The risk reward was exactly the same, no different, and I just was able to get about 20 more trades throughout the year using the 382 instead of a 50 or a 618. And you might be asking yourself, why would that matter? Well, if I can get the same risk reward and same winning percentage of a little over 50%, then I want to take that trade as many times as I possibly can. Because the more times I take that trade with that winning percentage and that risk reward, the more money I'm going to make. So I hope that kind of helps everyone to understand how I got to where I am in my trading career. Now, with all that said, I do not want anyone to think that I'm trying to tell people not to take a training course. I think that it is a very, very, very good idea, and I would highly suggest anyone watching this video to think about that as an investment and to take a training course. My training course is not out yet. I obviously would suggest my own training course, but it's not created yet, and if you're somebody that just wants to jump on it really quickly, then go out there and find you a training course and go ahead and invest your money in it, but make sure you pick the right one. Make sure you're not picking the one that's promising you 100% a month. Pick the one that's going to teach you the basic skills of technical analysis from a candlestick all the way up to structure and Fibonacci levels, and show you how to use a few different indicators like the RSI, maybe a moving average, how to use them and incorporate them into a strategy, not how to use them to trade. That's not what I'm saying at all. I'm completely against that. But if you find a training course that can teach you that and also throws in a risk management lesson in there with those 2 or 3 key technical analysis points, then I think anyone can be profitable in the Forex market or in any market. Because all you need is those certain skills. The risk management and the psychology are going to be the 2 harder things to accomplish. But once you get those 2 things and you have the technical analysis to back that up, then I think you can go through charts, decide what kind of strategy you want to create a strategy, test that strategy, and perform that strategy if it becomes profitable throughout your back testing. It's as easy as that, guys. So like I said, I'm not telling you not to go out and get a course. By all means, if that's something you are thinking about doing, then do it. If you'd like to wait on my course to come out, it will be out within the next month or 2, and my course will be similar to what I've been talking to you about. There will be a section for technical analysis, and there will also be some more mechanical trading systems that I will sell as strategies to keep you from having to do any of the hard work. Some strategies that I've created over the past few years, and they're not 100% accurate. They're not 90% accurate, but the strategies that I've created that I will be selling on my website are going to be somewhere above 50% accurate with a better than 2-to-1 risk reward. And I'm going to tell everyone that decides to purchase that course, all that information is going to be told to you up front on the website. I will give you the winning percentage, I will give you the back testing results and the forward testing results of the strategy before you ever purchase the course. If that's the kind of course you want to look for. If you can't wait for mine, then by all means go out and get something to use, to trade, to learn, and just make sure that they're giving you the things that I've mentioned in this video. So that's going to do it for my rant on Forex training courses and on strategy development. I hope you guys enjoyed this video. I know it was extremely long. I will try not to make another video quite this long. I normally try to keep these within 15-20 minutes, but this one has went way over that. So I will let you guys go here on this Friday afternoon. Enjoy your weekend, and I will talk to you soon.
Thank you for watching, and click the link attached in the description to get a 30% discount on transaction fees.